What if I told you there's a mysterious force in the stock market that shows up once a year, right around Christmas? It's quiet, it's subtle, but it's historically delivered more than 5 times the average return of any random week. It's called the Santa Rally. And no, it's not some jingle bell hallucination. It's a real data-backed anomaly that has baffled investors, delighted traders, and occasionally ghosted us like a flaky Tinder match. In this video, we're pulling the curtain back. We're going deep into what the Santa Rally actually is, why it works, where it works, and most importantly, whether we can expect Santa to show up in December 2025. Spoiler alert, he's probably coming. But don't hang your hat on the sleigh just yet. Let's go. So what is the Santa Rally? Short version, it's a tendency for stock markets to rise during the last 5 trading days of December and the first 2 trading days of January. That's a 7-day stretch of tinsel-covered alpha. It was first documented by Yale Hirsch, the OG of market seasonality, in the Stock Trader's Almanac. The numbers? Since 1950, the S&P 500 has posted positive returns in this window nearly 80% of the time, with an average gain of around a plus 1.3%. Sounds small. It's not. That 7-day stretch is only 3% of the trading year, but historically, it's delivered over 14% of the market's annual return. Basically, Santa pulls more than his weight. The man's on alpha steroids. Now, people throw around the term Santa Rally loosely. Some say it starts mid-December. Others stretch it into the first week of January. Some call the entire month of December the Santa Zone. But the classic rule, the one we're riding with today, is those 7 trading days, last 5 of December, first 2 of January. And that's where the data really sings. Now, let's talk geography. Because Santa doesn't just visit Wall Street, he's got global coverage. U.S. indices? Check. S&P 500, Dow, NASDAQ, Russell 2000. They all show consistent Santa strength. The S&P clocks in at plus 1.3% on average during the Santa window. The NASDAQ? A juicier plus 1.8%. Even small caps get in on the action. Russell 2000 shows similar or better results. Over in the UK, the FTSE 100 is basically Santa's vacation home. December returns? Plus 2.2% on average. Up 83% of the time since the 80s. That's like flipping a coin and getting heads 25 years in a row. Europe? Santa likes it there too. The DAX, the CAC, the Stock 600, they all show strong December patterns, with December contributing a disproportionate chunk of the annual return. Even Asia gets festive. The Nikkei 225 in Japan, plus 1.98% average December. The Hang Seng in Hong Kong, track plus 3.1%. Santa must love dim sum. Australia's ASX 200, strong in December. Canada's TSX, same. South Korea? Yep. Santa's global, baby. So now that we know it works, at least historically, what's behind it? Why does this tiny window of time tend to outperform? A few suspects step into the lineup. First, liquidity. Late December is a ghost town for big institutional players. Volume drops, volatility drops, and retail investors take the wheel. That means modest buying can move prices more than usual. Low supply plus low resistance equals smooth rally. Second, tax loss selling. Investors often dump losers in early December to harvest losses for taxes. By the time the holidays roll around, that selling pressure dries up, removing a weight from the market. Third, performance chasing. Fund managers who are behind their benchmarks sometimes buy outperformers in December to window dress their portfolios. Nothing like a little year-end FOMO to lift prices. Fourth, holiday sentiment. Yes, seriously. People feel good during the holidays. They've got bonuses. They're optimistic. They're looking forward to a new year. And sentiment can drive flows. Fifth, macro context. Here's the kicker. Santa rallies are strongest when the Fed is easing, or at least not hiking. In years of aggressive rate hikes or recession panic, Santa tends to ghost us. No surprise, tight money kills the mood. Let's run the receipts. In 2018, the Fed was hiking. Trade war headlines were everywhere. Stocks dropped hard in December, worst since 1931. Santa skipped town. In 2022, high inflation, hawkish Fed, same deal. Negative Santa. In contrast, 2019, 2020, 2021, Fed was easy. Sentiment was bullish. And Santa delivered. All right, now let's dig into performance. Across decades, the Santa rally has been durable. The 50s, 60s, 70s, solid. Even the turbulent 70s gave us a fair number of Santa rallies. The 90s, mostly positive, except a weird flop in 1994. 2000s, a bit mixed thanks to the dot-com bust and financial crisis, but even 2008 saw a bounce in Santa's window. The 2010s were shakier. We got back-to-back Santa fails in 2014 and 2015. Then again in 2022. But here's the stat that slaps. Back-to-back negative Santa rallies are extremely rare. It's only happened a couple times in 70 years. So when Santa doesn't show up one year, he tends to come roaring back the next. Let's zoom in on risk-adjusted returns. You might think Santa's gains come with added volatility, but you'd be wrong. During the Santa window, volatility is actually lower. Standard deviation, down. Skew, less negative, sometimes even positive. Kurtosis, lower, fewer extreme outliers. This makes the Santa rally one of the highest Sharpe ratio trades on the calendar. It's basically the market saying, relax, I got this. So Santa brings gifts, and he doesn't charge you beta to unwrap them. Okay? We've done the history. We've done the global data. We've examined the why. Now let's get to the part you came for. Will we get a Santa rally in 2025? Here's the setup. Inflation. CPI is around 2.5%. The Fed, unpacks. After a series of cuts in 2024, they're now sitting tight at about 4%. They're not hiking. They're not panicking. They're sipping eggnog. The economy, steady. U.S. GDP around 2%. Europe's hanging in. China's slowed, but not collapsing. No recession in sight. Liquidity, calm. Treasury markets are smooth. Repo markets are tame. Reverse repo balances are falling, meaning cash is re-entering the system. Volatility, low. The VIX is chill. Credit spreads are tight. Markets, up. S&P 500 is plus 12% YTD as of mid-December 2025. Momentum is strong. Sentiment is stable, not euphoric, not fearful. There's no big landmines scheduled between December 20th and January 5th. Fed's last meeting is December 17th, no surprise expected. Payrolls dropped January 2nd, maybe a wild card, but no one's betting on disaster. All signals point to green. So what are the odds? Historically, the Santa window gives you a positive return about 75 to 80% of the time. In years like 2025, where macro, liquidity, and sentiment all line up, that probability ticks higher. Our best estimate? 78% chance of a Santa rally this year. And not just for the S&P. The FTSE 100, the DAX, the Nikkei, the ESX, all of them show strong December tailwinds. It's a global phenomenon. And 2025 looks ripe. Expected return? Probably around plus 1% to plus 1.5% over those 7 days. Not a moonshot, but solid. Sharpe ratio? Still excellent. Could something derail it? Sure. If the Fed suddenly panics and hints at rate hikes? If inflation surprises to the upside? If geopolitical chaos erupts? Santa could pull a no-show. But none of those are on the radar right now. Absent a surprise, Santa's on his way. Let's bring it home. The Santa rally is one of the stock market's most durable and strangely magical seasonal patterns. It doesn't always deliver. But when it does, it tends to do so quietly, profitably, and across the globe. It thrives on low volume, light news, and high spirits. It gets a boost from tax mechanics, behavioral quirks, and sometimes just plain optimism. And in 2025, the stars are aligning. So whether you're a trader looking for an edge, an investor checking your December allocations, or just someone who wants a little alpha in their stocking, Santa's odds are looking pretty good this year. Just don't bet the farm. Seasonality is a wind at your back, not a promise in your hand. But if you're asking, is this the year Santa skips Wall Street? Our answer, probably not. Get ready for liftoff.